Hey traders, this is Matt from Zen and the Art of Trading. Today I'm just going to run you through an intraday trading opportunity I just took on Aussie yen. I'm going to demonstrate a little more and elaborate a little more on how I use basic technical analysis in order to make money out of the markets. I mean, this stuff is very simple. I've seen a lot of trolls on YouTube that claim that simple methods of trading don't work, and in order to be a successful trader you need to employ highly complex strategies, and you've got to operate your trading business as if you're a hedge fund manager. Now the beauty of being retail traders is we don't have any of those limitations that those big funds have. We can do whatever the hell we want, and the way I like to trade is I like to keep it as simple as possible. And so I trade the simplest price action patterns that I can discover through backtesting that give me an edge over the markets. The strategy that I've been using for the past 2 years, roughly, consistently, profitably, is one of the simplest strategies that I've ever come across. I'm not going to give away the rules specifically for it because it's not a good idea to give away your secret sauce as a trader for free because it's quite valuable information. But it's also not a holy grail secret. It's just one of many of thousands of methods that there are to extract profits out of the markets. And so I'm just going to run you through how I broke down this market and why I decided to take this short trade on Aussie yen on this 1 hour chart. You can see I've got a lot of drawings on here. Normally I don't have nearly as many of these drawing tools on my chart. Normally I have these 4 daily support and resistance zones, and I have about 2 minor zones drawn in. But today I just wanted to just elaborate. Seemed like a good opportunity to demonstrate how you can use basic technical analysis to build a case to enter a trade. I'm a systematic trader, so I don't use discretion in my trading, but doing this process gives me extra confidence in trades that I take. I had a lot of confidence in this trade today, but it was fun this morning to build this case for entry, and I just wanted to share what I did with you guys and why I thought this was a great trading opportunity, or a high probability trading opportunity. Now, on the daily chart, we've got a market that has broken and closed below several major support zones that have held for years, since the start of this year, and multiple years looking left. So we have this move here that broke through several support zones. We had a shallow retracement and then a trend continuation move lower, putting us into a bearish trend. Now, since then, price has not broken and closed above the swing high of this trend continuation move, which means that the bearish trend is still intact. Sellers still have control from these highs, and the market is likely to be pushed lower from here. This is the last line of defense in this trend, and the trend is still intact. So most professional traders, their bias is short, even though we've had this big pop out of this big move higher, out of this 4 hour support zone. If you look on a 4 hour chart, you'll see there's a 4 hour body close in here from this flash crash that provided support structure for price down there. But that is a minor support zone. We've had a sharp rally off a minor support zone that has not reversed trend. This is a classic trap for traders going long. There's probably a lot of traders going long in here, and maybe price will head higher. It's not, I don't have a crystal ball. I don't know what price is going to do, but according to my testing and the testing of a lot of professional traders and the experience of a lot of professional traders, until price can break and close above this swing high, there's a higher chance of price moving lower and even into trend continuation than heading higher and into a trend reversal. So that alone gives me a lot of confidence in going short. So we've established that although we've reclaimed this daily support zone, price is still in a bearish trend on the daily chart, which is the mother of all charts, especially for intraday traders. I mean, that the daily chart's the boss. Whatever the daily chart's doing, that's the one you pay the most attention to, give the most priority to. And so not only is the bearish trend intact, but we've also had a large pin bar rejection, shooting star candle rejection off this 50-day moving average and this 76 even handle number. And since then, if we drop down to the 4-hour chart, you can see price started to make higher lows. Then it broke above this high, making this a bullish trending move. We got a shallow pullback and then a break and close above this high, making this a bullish trend, an established bullish trend. And then we get this gigantic rejection wick at the height of this trend. This is referred to as a blow off top. You can see that price was getting a little exponential here, given the fact that daily chart is still in a downtrend. You don't want to see this happen if you're long. After that happened, we got this move down here that broke and closed below this swing low, which does not indicate necessarily that the trend has reversed, but it does indicate that the bullish trend is over and we're entering a period of consolidation / potential trend reversal. Then we get this lower high. Now we have a potential trend reversal situation because price couldn't even get above the bodies of this high, couldn't get above 76 even. And we've just made a lower low from this low. So now we've got a potential trend reversal situation occurring. And after this lower high occurred, that's when I drew in this minor resistance trend line. Now I don't trade off these trend lines, but this was just a good example to show you more basic methods for building context in the markets and drawing out a map so that you know where price is and what it's doing and where it's likely to go next, what it's likely to do when it gets to where you think it's going to go. It's like a chess game, it's all about being one step ahead of the markets and reacting to your pre-decided plans and not acting on your emotional reactions based on the heat of the moment situations. That's how you get trapped in buying candles like this. We've got this minor supports trend line in here. We've got high lows that came in and this trend line began to act as support. Price hasn't touched this trend line since it got up here. So when it does, it's potential that it could act as support, minor support, depending on, we're in consolidation. So there's a higher likelihood of this acting as support than usual, I would say. If price were below this low, there'd be a lower chance because the trend would have definitely reversed. But right now, we're in consolidation. So there's a potential this could turn into a bullish flag pattern and break higher, break above this 50-day moving average. I wouldn't say it's a high chance, but it's a chance. And so that's important to keep in mind. And that's why I drew in this resistance zone. I'm interested to see how price behaves when it retraces up into this zone, if it retraces up into this zone. That's the 4-hour chart contextualized. So we've got a bullish trend that has just potentially reversed on us. Now, I took this trade on the 1-hour chart. So I'll drop down here, and this is where I drew in all these zones. So this black line up here is the height of the daily wick that rejected off the daily EMA. And so if price gets up there, that's a zone that I want to be careful going long here with my target beyond this zone. That's basically the case for all these black lines. They're there to indicate to me danger zones that I don't want to be going long near until we get a break and close beyond these zones. So you'll see here, this was the zone I drew in yesterday, contextualizing where price was, and I was waiting for a break and close above this high and a pullback to ride price up here, or I was waiting for a break and close below this low and a pullback to ride price down to this zone. And this was the scenario that played out last night. I woke up this morning and saw that I had a very simple price action pattern, impulsive move below the 50 EMA that breaks structure. We're in consolidation, but that's okay. According to my testing, this still has because there's no support, no reason for price to reverse in this no man's land zone. I'm allowed to take trades if I have more than a 2-to-1 risk reward potential down into this zone, which I did on this trade thanks to a late entry. I got this set up at 6 a.m. my time, which I was not at my computer for. My spread is terrible at that time of day, so I don't take trades around there. So I waited for the Australian and Asian Open at 9 a.m. before I ended my trade. Stop loss 1 ATR above the swing high, and target 1 ATR from my entry, which gave me a target above the pullback of this low, which is always great. I love I love it when I can enter a pullback trade, especially in a greater context of consolidation, when I can get my first target above the swing low of the pullback. Just because markets tend to consolidate more than they trend on all time frames. So if you can get your first target off, your first position, if you trade multiple positions, if you can get that off before a test of the low, that's always a good idea. If you prefer to be a little more conservative and win more often than you lose, that's a good strategy to employ. Good thing to keep in mind. If I drop down to the 15-minute time frame, you'll see why I drew in all this stuff here. Now, so you see, I'm building it. We're getting lower and lower. It's like having magnifying glass with these time frames. I take this trade on the 1 hour chart, and I don't really care what's going on the 15-minute chart or 4 hour chart. I do care what the daily trend is, but I use these time frames just to build more confidence in the trade, just so that I forget about it and I can. When you enter a great trade that you know has a good edge and you have a lot of factors in confluence that support your bias, it just makes you feel better about the trade. I don't necessarily put on any more risk or anything like that. I just feel better about it. And so that's the purpose of drawing in these extra technical levels. Now let's discuss this trade I took. You can see I entered a little late on this retracement at 9 a.m., but that gave me a better risk reward profile on this pattern, in this move. And price pretty much immediately rolled over 2 hours later and hit my target. So now my stop loss is at break even. You can see we've just broken this minor trend line / flag trend. This is a consolidation pattern on the 15-minute chart, as you can see here. We've got a trending market that is making lower lows and lower highs impulsively below the 50 moving average. We get a break and close below this low, a pullback, and then a break and close below that low. And then this whole thing here is the pullback of this trend continuation move. Because just like on the daily chart, until we break and close above this high, this trending move is intact to the downside. Because we got this 1, 2, 3 move in here. Until we break and close above this high, we have a downtrend. Likewise on the 15-minute chart. Until we break and close above this high, we have a downtrend. And so that was extra confluence on this 1 hour trade I took, because this 1 hour move is the pullback of this bearish trend on this time frame. I've got a lot of things going for me, backing the bias of this trade to the downside. And now that we've had a break and close below this consolidation flag pattern, and we did not break and close above this high here, I'm anticipating price moving down into this blue zone. It'll be interesting to see what happens if and when it tests this blue trend line from late last month. But we'll see. That's why I drew it in. I just want to keep an eye on it. It's interesting, especially if price takes a while to retest this low. If this low is tested in confluence with this trend line tonight at midnight around there, which is unlikely. I'd expect a bigger move around 6 p.m. During the European Open. We tend to get a bit of movement. So price is likely to test this low before this bullish trend line, but we'll see if it gets tested in confluence. We could see a pop out of this zone. But I'm actually anticipating price breaking, closing below this minor swing low and this bearish pullback. I mean, these candles are quite small. This is a weak pullback, and the size of this bearish engulfing candle here that broke this trend line has made me more confident that we're heading down lower. And so if we do get into this zone, I'll be looking to take my second position off potentially if I get an exit reason down here. I'm not just going to take it off just based on what I feel like. I'm going to take it off based on patterns that I've tested that have proven to me to give a higher probability of price having a meaningful bounce out of this level, because there is also the potential that price will just blow straight through this support zone and continue the daily trend lower, which is looking likely at the moment. The only bullish thing I'm seeing here is that we could potentially create a head and shoulders pattern on this time frame. If we find support in this blue support zone, this major daily level, because we have got a higher high than this high, this could be a nice head and shoulders completion point for a trend reversal. But I don't see that happening right now, so I'm not going to pay too much attention to that until we get into this zone. And yeah, that's trading. trading using very simple price action patterns. I just used a bearish engulfing pattern, 50 EMA, and ATR to set my stops, and that's it. The RSI indicator down here, I don't use that for trading decisions. I just use that to monitor momentum in the markets. I like to know objectively whether price has strong momentum or strong bullish momentum or strong bearish momentum, which when this goes green, that's what that tells me. It doesn't mean price is oversold necessarily. It just means that price is moving quickly in that direction or with great magnitude in that direction. The candles are getting larger in that direction. This usually just indicates that we are in a period of expansion. So yeah, price is, this is also a good example of the fractal nature of price action. We've got a bearish trend continuation move occurring here, potential move occurring here on the daily chart at the same time as a 15-minute chart. Almost exactly the same situation. The 50 moving average acting as resistance and a failure to break and close above the swing high in the previous pullback. We've now broken and closed below this little cluster of support in here, and it appears to be acting as resistance. If I drop down the 5-minute chart, yeah, look at that. Very interesting. These lows here are now acting as resistance, and we've got the 5-minute 50 EMA acting as resistance potentially. We've got the 15-minute 50 EMA acting as resistance, the 1-hour 50 EMA, the 4-hour 50 EMA, and the 50-day EMA, which actually indicates to me that we could see a more bullish movement out of this zone, because that's an indication to me that price is kind of oversold at present, or at least a mean reversionist would say that. That's it. That's just a small example of how to build a case for entry and build confidence in your trading strategy and use basic technical analysis to contextualize where price is and where it's likely to head next, and how to develop a preemptive plan on how to act on that. And that's how you keep your emotions cool in trading. I'm in the middle of a drawdown right now. I think I'm down 4 or 5% on my equity high for the year, and I could care less. I'm still trading just as I normally would every other day, even when I'm up. And I'm achieving new equity highs. It's not as fun, obviously, because I'm not making money right now. But if I keep doing what I've always done, I know I will make money eventually again. And my drawdown will be shallow, typically less than 10%. And I should end the year with a double-digit return percentage-wise. And, that's all I'm after. That's the beauty of systematically trading very simple price action patterns that give you an edge. Probabilistic statistical edge over the market. And yeah, now I've put myself in a risk-free position. I've got my stop loss at break even. If price stops me out for break even, big deal. I made a little bit of money. Was worth the risk. Had a high chance of hitting that first target, so it was worth the risk. And if I have a little bit of luck, because a lot of traders don't mention that, but in trading, it plays a big role. If I get lucky and price does break and close below this zone without stopping me out first on a retracement, it'll be happy days. I'll be stoked. I'll get a greater than 4-to-1 potential reward out of this second position, and that's why I trade the way I do. And if you want to learn more about how I trade and why I do what I do, you can check out my blog, which is called zenandtheartoftrading.com. Where I post articles on things that interest me, on things that I've found helpful and valuable in my trading journey. I've got to focus on trading psychology and on Forex, obviously, and just on general, and just generally what it takes to be successful as a trader, in my experience, and what's worked for me personally. I don't talk about anything that I don't understand, and that's the point of this blog. It's like a library of information that I've accumulated over the years that I want to store for permanent record, both for myself, and I figured while I'm at it, I might as well release it publicly and let anyone see it, because I'm passionate about trading. I love trading. I trade every single day, and I have for the past 3 years. I started trading in January of 2017. And I haven't stopped. I've looked at a chart every day. I've been on holidays. I've been overseas. I was on a cruise ship a couple of years ago and I was trading. I was in Fiji. I was trading on the beach. I don't recommend that because it's actually really uncomfortable and it sucks. Trading on the beach sucks, especially after a couple of drinks because you don't want to trade. You just want to chill out in the sun. So anyone that tells you that becoming a successful trader results in you sipping cocktails and living the dream on the beach, they've never done it themselves because it sucks. You get sand in your laptop. You got to use your shitty phone hotspot for internet. It's just terrible, man. You don't want to do it. You want to enjoy the beach. Go to the beach. You don't go to the beach to work. That's stupid. And trading is work. Don't make any mistakes about that. It's work. But it's rewarding work. It's I wouldn't say it's easy, but it is simple work. Something can be both difficult and simple at the same time, and trading is exactly that. And the reason it's difficult is, I believe, purely psychological in nature, which is why I have a focus on trading psychology on my blog. But anyway, that's enough about that. If you want to learn more about my trading specifically, come here and check out my journal. There's my equity curve for the year, and I analyze my monthly trading statistics. I go into not as much detail as I should, and not as much detail as someone like Mike Bellafiore would, or a professional prop trader. But this is just the beginning for me, and I'm just getting comfortable analyzing my performance publicly before I go to the next level with my statistical analysis of my trading. I'm just in the process of collecting information and data on my live trading. And then at the end of the year, I'll do a big review on what worked for me and what didn't work for me and what I plan to do next year to change, to improve my process. And that's what trading is. It's just a perpetual journey of self-improvement. And there is no end achievement or end goal. There is always something new to do and always something more you could be doing. And rather than be overwhelmed by that, you should find that exhilarating and inspirational because, I've got something to do now for the rest of my life that I enjoy and I find engaging and interesting. And that's, to me, is just, that's why I love trading. That's why I'm doing this. That's why I'm going to the effort of uploading these videos. That's it for this video. Thanks for watching. I'll catch you next time. I'll let you know how that trade played out, and good luck with your own trading. Thank you for watching. I appreciate your time, and I look forward to continuing with this little project over the next, perhaps the rest of my life. Who knows? We'll see. Take care and goodbye.